Hello, I'm Monica Gibson, and Societe Generale's Alvin joins me down the line for the Dukascopy week ahead. So Alvin, some experts are urging investors to stay focused, that China and Greece are non-issues. As things stand currently, is that a fair call?
I think for the near term, that's a fair call. We have seen today the Greek can being kicked further down the road. And China also, we have seen the government's determination to support the equity market. Indeed, the equity market has bounced off the lows quite convincingly. So the short term, the macro risks from both of these should recede.
Looking out throughout the week, lots of US data, and Wednesday's industrial production could be important. Economists are looking for output to have recovered in June after 3 unexpected falls. But if it doesn't, could there be renewed fears about the health of the economy?
Well, actually, there's quite a lot of US data coming out this week, and probably more important than the industrial production numbers would be the retail sales and the CPI inflation data. But yes, by and large, if US data are unexpectedly on the weak side this week, there will be renewed fears about the US growth outlook. Also, pay attention to Fed Chair Yellen's congressional testimony on Wednesday and Thursday. Our view is that the U.S. Economic recovery is on track and that the Fed will be hiking later this year.
In the UK, we could see the pace of decline in unemployment is now slowing. There will, however, be mixed news on inflation. Consumer price inflation might actually fall from last month's 0.1% as food prices fall. But what is your prediction, and how do you see sterling trading as a result, especially against a backdrop of supposed progress finally being made in the Greek saga?
Our economics team actually expects the UK CPI inflation, headline inflation, to stay at 0.1% year on year, so no change there. But core inflation is expected to pick up to 1% year on year from the previous 0.9%. So we do see a slight pickup in UK inflation. Also, close attention should be paid to the average earnings growth in the UK employment statistics. We think the uptrend in the UK wage growth will continue. And if correct, this should support sterling higher this week. And it should keep euro sterling under pressure. And we think a break in euro sterling of the 70-50 level is imminent.
We might see some encouragement from China, where official data could show the strongest annual rise in industrial output for 4 months, at a little over 6%. Do you think this could provide a sigh of relief over the recent stock situation, or will the data anyway be tempered by widespread skepticism about the accuracy of official numbers?
We think the Chinese data this week will indeed show growth stabilize in the third quarter, and this will indirectly help the equity market. Nonetheless, the structural growth slowdown story in China is still in play in our view, but there will be near-term relief in the next few weeks through the third quarter.
And lastly, what else do you think our viewers should keep an eye out for?
I would say the top 3 event risks to look out for this week would be the Greek parliamentary vote on the measures that have been agreed on in Brussels just this morning. So that is due by Wednesday. We also, as mentioned, we have Yellen's semi-annual congressional testimony. She will be testifying before the House Committee on Wednesday and then the Senate Committee on Thursday. And finally, the third event risk is the Iranian nuclear negotiations. An agreement on the Iranian nuclear program will be negative for oil currencies in the short term, particularly the Canadian dollar and the Norwegian krona.
Alvin, thank you for your insights. Well, the team will keep you up to date on all the events Alvin and I have discussed, as well as much more. So please do keep clicking back to Dukascopy TV. Goodbye for now.